What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Friday, May 3rd. Alright guys, SPY here today up $4.68 per share. That's plus 0.94% in regular trading hours. The ETF is up, at least as of right now, almost 2 points here in the after hours. Additionally, first of all, as always, take after hours movement with a grain of salt. However, of course, that is happening because we got Apple earnings. Quick little rundown. I'm going to do an Apple video here today, but I'll just give you a quick rundown since it is, of course, going to be the biggest contributor to market-wide movement. Slight beat on earnings. Overall revenue down 4%. iPhone sales down 10%. However, they announced their largest ever share buyback to date, $110 billion worth. So that is going to be moving things here today, but let's take a look at SPY and pull out everything we possibly can. As always, we'll do the volume profile analysis. We'll take a look at the psychological levels that we need to pay attention to because smart money is going to be watching all those. We'll finish out here with the expected move and the directional bias out of the chain. This should get you all ready for tomorrow, so let's do it here. First of all, a couple of macro things to be aware of here tomorrow. 1 hour before the market opens, sharp. Wherever you are, that time will of course vary. Just 1 hour before the market opens, we get the U.S. unemployment rate. The forecast is 3.8%. The previous was 3.8%. U.S. non-farm payrolls forecast is 240,000. Previous was 303,000. And U.S. average earnings year over year forecast is 4%. Previous was 4.1%. So keep an eye out with for that. That will likely be moving things a bit 1 hour before the market opens. But let's take a look now and do our quick volume profile analysis on the 5-minute. Listen, by the way, if you are new here, guys, SPY is a daily upload. It's the first video I upload every single day, so please subscribe to the channel. My goal here is 10,000 subs. I appreciate it, and I'll keep the SPY videos coming. So what we're doing here, by the way, we're taking a look at the underlying volume that goes along with the price action. The price action's done, right? We can see what happened, but the volume profile is kind of like a hidden piece that we peel the carpet back, and there's a trap door, and we can take a look and see, okay, what did the underlying data say about the actual moves that we already know occurred? Let's pull this up and see if we can pull any bias out. The open itself, actually quite contextual. We get that higher volume open and then the fade. We get a little bit of a pop, actually, as we hit that intraday low here on these couple of candles. And then we reversed. Okay, volume did increase on these two candles, showing a little bit of perhaps capitulation, like short term. When I say capitulation, a lot of people think like bottom of a bear market, multi-day event. No, I mean just very, very short term, intraday into the intraday low. That's going to pump volume up just a tad. We see that there, perhaps a small amount of bearish bias, but again, it's so slight. It's just 2 consecutive bars. And then volume faded as we headed into the close, as we headed into midday. As we headed into the close then, we did see a couple of volume pops on the red bars in particular, a couple of red bars consecutive here. We had, a green bar mixed in, and then we got that very, very normal last bar of the day rebalancing going on. We get that like every day on SPY. That's going to be the funds and institutions rebalancing before the bell rings, and that's usually driven by algorithms. Okay, so I usually ignore that last bar, at least on SPY. But these red bars, previously, it's normal to see volume increase into the close, but these few pops, to me, I'm comfortable assigning just a tiny little amount of bearish bias there. It's not even average. It's not even, especially it's not overwhelming. It's sloppy and it's very slight. This isn't like we're seeing 8 consecutive red bars of 2 million shares or 1.5 million shares, and then all the surrounding volume is green bars with 500,000 shares. That would be like very obvious bearish bias. This is just very slight, but something I don't really feel like ignoring. So let's move on here. Let's take a look at the psychological self-fulfilling prophecy levels that the funds and the traders are going to be paying attention to here on SPY tomorrow. So you can see my charts are very simple. This is the 30-minute. I have the 200 period, the gray line, and the 50 period, the white line, and then the volume. Now you guys remember yesterday, right? We had stayed beneath both the 50 period and the 200 period after trying to reclaim both on that market-wide pump and fade that we saw. Today, we actually did reclaim the 50. We reclaimed it actually last night in after hours, And then today in pre-market, we held off the open, we dumped through and then reclaimed it late in the day, eventually to get rejected off the 200 period into the close. We've reclaimed it now in the after hours, okay? But after hours is, you know, I understand that this is off of the Apple news, and this is a little bit different than Nvidia moving off of AMD earnings, okay? This is Apple obviously just being the biggest stock in the market, moving the S&P, okay? This is a little bit different because SPY is an ETF, okay? It's not just its own individual stock. But either way, the reclaim in the after hours, it's just not really enough for me. So tomorrow, bulls, what I'm really looking for is a retest of that 200 period and true confirmation intraday. I don't care what volume we test the 200 period on. If we open above it, as long as we bounce off of it on higher volume. If we open below, I would really prefer to see a high volume breakthrough, low volume retest, high volume bounce to reclaim the 200 period as support. Whereas you bears, you want to see that reject, and your ultimate goal is to do that same thing, but with the 50 period. Get downside through on high volume, low volume retest, high volume rejection. To get to both the breakthrough and the confirmation of short-term resistance all in the same day. Let's move on here now to the 4-hour chart and take a look. We did reclaim the, of course, this is going to be after hours because we closed today at 5:05. Well, actually, yeah, we closed at 5:05:03, which was basically running into that 50 period on the 4-hour. And this being a 4-hour chart, it's 8 hours of data packed into a 6.5-hour trading window. The 4-hour can be a little bit hard to look at for that reason. You have to kind of look a little more closely. This upside move on the same candle is after hours, okay? But the close was basically right on top of the 50 period, at least on the 4-hour chart. So what I'm looking for tomorrow, bulls, I want to see the 50 period act as support, okay? Really simple here. You can see it's ascending. It's in a beautiful scenario, or it's in a beautiful trend, right? This is a nice setup, but really what I want to see is that act as support with a high volume bounce, whereas bears, number one priority on the 4-hour chart specifically is just to get back below that 50 period and ideally treat that as a resistance as we had the last couple of days. Okay. Now, the daily chart, if we take a look, the daily is going to be the most important chart of all because it has the most eyeballs. All right, now if we're looking here, you can see a couple of things are currently relevant. If we look at the closing price, remember the daily is not going to show after hours. If we look at the closing price, we are about 1.3% away from that 50-day moving average. But with the after hours movement, it's currently, you know, this is going to change likely by the time, it won't be exact by the time you watch this. But if it's at 506.87, it's almost 2 points higher. So you're talking about, you know, the stock really, or the ETF really being about there. So we're looking at maybe a 1% move as of the current price up toward making a test of that 50-day moving average, which currently sits at 511.47. But understand, guys, that this is a really common mistake. Moving averages move, right? It's in the name, and they move day by day. So I encourage you to have all of these on your charts. If you want to set your charts up the exact same way as I have them, feel free. But, you know, if you're watching, like especially on the 30-minute chart, you're watching the video, and then tomorrow at noon, you're like, oh, he said that it was at, you know, such and such dollar and cent position. It's going to be different. So you need to be watching them in real time. But I think aside from the 50-day, part of the main story here on the daily chart on SPY, which we tested today and actually ended up holding, is $500 a share. Okay. So we right now, we're kind of in a channel between the 50-day moving average and $500 a share. If you're a bull, the goal is to get outside of that channel to the upside by breaking through the 50-day moving average on high volume, and then over the following days, treating that as support and then moving higher. Okay, whereas if you're a bear, that's the top end of your channel that we're currently in. So that would ideally want to be seen as resistance, and the ultimate goal is to get back down below 5, break out of that channel to the downside, and then in the following days, treat 500 as a resistance. Implied volatility, if we take a look, still falling. The lower IV goes, the more favorable conditions become to purchase new options. Okay, so keep that in mind, but also the lower that goes, if you're holding options that you bought while IV was any higher, then you are experiencing some IV crush. Keep that in mind. Now, the expected move on SPY for tomorrow, if we take a look here, remember, this is based on the closing price, not the after hours price. Tomorrow is May 3rd, and we have the luxury of daily expirations on SPY. Part of the reason why I like covering this one every day is because this is something we don't have on other stocks. And the expected move by tomorrow's close compared to today's close is plus or minus $4.64 per share. You know, again, I get a lot of questions. What is the expected move? It's a technical term, guys. It's priced in by the traders themselves. So if you traded that expiration, it's kind of priced in by you. Of course, everyone in one big sample size. And it's the expected volatility for the next day. So it's pulled from the implied volatility of each expiration, and then it prices the expected move. By design, there's no directional bias, right? Because it's being pulled by both calls and puts. But knowing the expected volatility that's being priced in by the market is a huge part of the picture, right? If you're ignoring volatility expectation with just a directional buy, it's not enough. If you're just trading options with only okay, I think it's going to go up, I think it's going to go down, that's not enough. You're ignoring a huge part of the options picture, which is the current expected volatility being priced into the options. You're missing an entire way to position yourself more effectively, since options are directly impacted by the current expected volatility. That's why IV crush is a thing. But we can pull out directional bias out of the chain heading into tomorrow. So this is what the market's saying about tomorrow from a directional standpoint in the options chain. We had just under 8 million total contracts traded here today, 3.79 million calls, 4.16 million puts. So that's not the craziest we've seen as of late, but a small bearish bias on the overall call put ratio. And the short-term speculators, that 0 to 20 delta range, since this video is more geared toward tomorrow, right? 1.27 million calls and 1.71 million puts. So a bearish bias out of the short-term speculators as well. Listen, guys, again, if you're getting value out of these daily SPY uploads, I ask you to do one thing and one thing alone. Takes half a second and it's free. Please leave a like on the video. Let's see if we can get 100 likes on this one. We got close last night. And then go on and enjoy your day. I appreciate it, and I'll see you in the next one.